Unequivocally, the most common question I'm receiving right now as a real estate agent here in the Phoenix, Arizona market is, Kelly, should I rent or should I buy right now? What would you do? And that advice is complicated, guys. It takes a few minutes to unpack, so we're gonna do that right now in this video. So if you're wondering right now in this economy with rates rising and mortgage rates rising and property values starting to soften, what should I do? You came to the right place. Stay tuned, we're getting after it right now. Let's go. Hey guys, thank you for joining my channel, Everything Phoenix, here on YouTube, where we're discussing that and renting and buying and mortgage payments, interest rates, all the hot button topics that are just that in the marketplace right now in this current unstable housing market, economy, inflation, all that stuff, right, going on. We're gonna discuss a very important question that we're getting all the time, which is it better to rent or buy? Okay, but if you could, guys, please ring that notification bell real quick. We're putting 2 videos out every single month for your personal enjoyment, and smash it. Just go ahead and just smash that subscribe button and like this video, please, because that will get us out to more people that can hopefully enjoy this content. But thank you very much, guys, for joining. We do appreciate your time. We know it's valuable. So let's jump right into it. Okay, did you know that in 2021, last year, Phoenix, Arizona gained 85,000 new residents? Guys, that is a lot of people coming from all over different places across the country. Coming to Arizona, they want a part of the sunshine, the weather, and the good climate for work and business and low taxes and all those things that attract people to live their lives as free Americans, right? So Phoenix is a great place to be for that. But should you rent or should you buy? Because everyone has to live somewhere. What is the best financial decision for you? Now, that obviously depends upon a lot of different things, and some of those are going to be specific to your personal situation that you have going on right now, your age, the type of job you have, if you have family here, all these other things that will play a role into it. But let's just go over some of those aspects that will hopefully help you make the right decision. Let's talk about the average rent right now in Maricopa County, which is pretty much the entire greater Phoenix, Arizona area, is $2,175 a month. Now, the median home price is currently $461,000 throughout the Maricopa County area, all right? That breaks down to a payment that's going to fluctuate based upon whatever rate it is, guys, and rates are changing quickly. The Federal Reserve keeps meeting, and every time they meet, approximately once a month, they have been raising the rates, and the last meeting they had was fairly significant in terms of that raise, going up 75 basis points. And even more good news, they say they're going to raise the rates every single time they meet the rest of this year, which I believe is about 4 to maybe 5 more times. So guys, buckle up. A lot of people predicting rates are talking about possibly having rates be around the 8% mark, give or take, by the end of the year 2022. Okay, so that freaks everybody out, right? But why? Why should that do that? Now, obviously, you can get a calculator out or get an amortization calculator out, even better, and you could calculate a payment based upon a certain rate. Good news is you can still get a fixed rate mortgage, 15 years, 20 years if you want, 30 years, and you will know at that given time what your payment is going to be. So that's just one of the advantages of owning a house versus renting. Now, I'm going to submit to you that I'm going to make a hard case that it's going to be buying a house, guys. Let's just let the cat out of the bag right now. Spoiler alert, I'm making that case because I believe in the vast majority of situations, buying is better than renting in pretty much every single market there is out there. Now, let's go over some of those advantages of buying. This is a slide that actually Zillow put out of a little quick study. Now, they're using a home price of $470,000, and they're assuming that someone's going to put down 10%, which is $47,000, and they're going to do a 30-year fixed loan. Now, this is about a month old. They're using an average rate of 5.27%, and for a lot of you, that rate has sailed, right? That ship has sailed. There's no more 5.27 rates out there. But there are some rates in the 5 still for good borrowers and good situations. So let's keep looking at the graph here. So 5.27 is the rate, but you can plug in whatever rate it is that you're at currently for your situation. They're breaking down insurance at $83 a month, taxes approximately $200 a month. Yeah, that's right. For a $470,000 house, guys, in Arizona, property taxes could be right around that $200 a month. Cheap. El Cheapo in Arizona for property taxes. Another reason why you should live in Arizona and own a house, okay? Now going back to the screen, if you're putting down 10%, it's less than 20%, which at that point you're gonna have PMI, which is mortgage insurance on your loan. That will continue until you get to a loan to value of about 80%. And then it can drop off based upon a refinance or a call to your lender. That puts your all-in payment at $2,832 a month, with P&I being $2,341. Okay, now look at the assumptions they're making here if you buy a house, even if it's quote unquote in a higher market and with a higher rate. Okay, now this is a case study that Zillow has proposed, and it's a 5-year case study, all right? So you're looking at your principal you're paying with your monthly breakdown and your interest with your monthly breakdown per month for 60 months. Now for 5 years, your initial principal will be $423,000, and in 5 years, you will pay down $33,000 towards your equity, and you will have a remaining principal balance of $390,000 at the end of 5 years. Okay, now that's one of the benefits of home buying is the principal buy down on your mortgage. That you're just doing because you have to live somewhere anyway, right? Now, the other advantage is appreciation, okay? So now we're using a 6% annual average appreciation because the rate of inflation in March was 8.5%. Long-term 21-year median inflation is projected at 5.7%. So because inflation is going to go up, they are saying around 5.7%, they're using that appreciation mark to be almost equal to that at 6% annual appreciation. Now that being said, you can see with 6% per year, every year, that goes from 470 to 498 and all the way up, so on and so forth. In 2027, the value of your home would be worth $629 approximately $1,000 in just 5 years with a modest, for Arizona, pretty modest 6% appreciation rate. Now, obviously these are assumptions. It may not appreciate that much every year. It's just an average that everyone's making the assumption that very well could play out over the course of 5 years. In doing so, in 5 years appreciation at 6%, you're talking $159,000 of appreciation total in just 5 years. So if you add those two things together with the $33,000 of principal buy down and the $159,000 of appreciation, you're looking at $192,000 gained in your pocket, or at least on paper as net worth for owning a home, even with a rate of 5.27%, which a month ago that was kind of high. Now obviously if it's at 6 or in the high 5s, that's higher, and it's probably going to continue to decline, guys. But just put your rate in there, and either way you will have some sort of benefit if you hold real estate long enough. That's pretty much a time-tested fact, okay? So that is a awesome sheet to look at with the case study of owning a house at a median price point for Phoenix for just 5 years of what potentially is likely that could happen. It could go the other way, but the fundamentals of real estate and the economy right now are much, much different, guys, than what it was in 2008, 9, and 10. And we did a video on that a few weeks ago, so go and check that video out for all those details as to the differences between now and then, okay? Now, conversely, let's look at renting. So we have this median lease price by quarter, okay? This is from the Cromford Report, which is the leading housing economy in the state of Arizona that we subscribe to, and we get a lot of great data from. And this is awesome because it tells you everything you know about pretty much anything housing related in Arizona. But this chart specifically is for rental rates. You cannot ignore the sharp increase of rental rates over the past 7 to 10 years. It has been pretty dramatic. Now, I would make the argument, guys, that rental rates in Arizona prior to 2014 or 15 even, were highly undervalued. In fact, they range on average between about 69 cents to 75 cents a square foot for most properties on average across the Maricopa County, Phoenix area, all right? That's cheap. I don't care, especially for what Phoenix has to offer in terms of lifestyle. That is very cheap, guys. So now it finally adjusted, but adjusted up, and adjusted up quickly. So now you're on average in the ballpark of like $1.25 or so a square foot for the average home, whereas just about 6-7 years ago you were at 75 cents a square foot for rent, all right? again, in an influx of population creates that demand, not enough supply, and there goes price, right? But it's been great for landlords. So if you own property, not only did you get the appreciation of your house, you also got rental appreciation and more cash flow in your pocket. So another good reason to be an investor in Phoenix as well. Like myself, if you have any questions about that, please call me. I am a passionate nut when it comes to real estate investing specifically, and would love to chat with any of you guys about that anytime you would like. So if you look at the graph here, you can see that the median rental price is $2,250 as of the Q2 of 2022 per month. That is pretty significant, especially when you're looking at the median housing price being about the $470,000 mark. Almost, you're at 461, and with the current rates, you're in the ballpark of somewhere most likely $2,800 to $2,900 a month. So in this situation, for that same type of home, when you're renting, you're looking at saving approximately $500 to $600 per month if you're renting, but you're missing out on all the future advantages just for a little bit of convenience today. So sacrifice that convenience right now and think longer term. You will thank me in 5 to 10 to 20 to 30 to 40 years. Lord willing, I'm still around. Okay, so that is awesome, guys. I hope you're seeing the advantages of owning a house. Now let's go back up to that rental sheet here. I want to show you that at the very bottom where it says the general standard assumes a family can afford to spend 28% of its gross income on housing. So at $2,250 a month, that's affordable for a family making $96,000 a year if it's 28%. Okay, now a lot of families and financial planners will say you can go up to 32% or so of your monthly gross income, and that's the max that really should be spent on housing. So if you did that, so that the interesting part about that is, did you guys know what the median household income is in the Phoenix area? It is $68,000 a year. Okay, that's the median household income, whether it's one spouse, one person, or two people working. That's the median, $68,000 a year, which is higher than the average U.S. city, which is good. But again, if you're at 32%, which is the max most people will say you should spend on housing per month, that puts you at a monthly payment of around $1,800 a month, which is lower than the median, obviously, rental price, and clearly lower than the median payment on a median home. Okay, so that is an affordability issue that Phoenix has right now, and that's why you're starting to see the market soften as we speak. Okay, so we can get into that as well. Okay, now the last thing I want to do is point to the mortgage rate history graph on here real quick. We all know the story, but I'm going to put it on there as a visual anyways because it's good just to be reminded of the perspective, the historical perspective for mortgage rates. Okay, and when you pull this up, you can see that obviously back in the early 80s, rates are up in the 18th percentile. Now they're again around that 5 to 6 percentile, and which is still much, much lower. In fact, it's still lower than where they were in obviously the 2000s, okay? Early 2000s and whatnot. So it's still very good when it comes to borrowing money. It's just not what people are used to for the past several years, having rates in the 3s and the 4s and the 2s even, right? So again, guys, it's still better to buy even though you are going to pay a higher rent. Again, I heard this guy say this one time. I'll never forget it, guys. He made this quote. He said, you know what? No one's ever gotten rich off real estate because they had a low rate. Think about that. So there's a lot of people who over time made a lot of wealth in real estate, a lot of money in real estate, and if they never would have bought that property because they thought the rates were a half point or a point too high, they never would have bought that piece of property. They never would have the hundreds of thousands of dollars added to their net worth or millions of dollars added to their net worth over time, guys. So again, over time, real estate does this, right? It just does. So think about that. Now, a couple things I want to talk about when we're on net worth. All right, this is an interesting stat, guys. While we're talking about that, let's stay on net worth for a second. Did you know in 2021, the average net worth for the average American out there is $121,000, which is up significantly from just 5, 6, 10 years ago, okay? $121,000. Now, did you know this stat's gonna blow your mind? Did you know the most recent study I could find on this was 2019? So according to a 2019 study, the average net worth for an American who owned one home, okay, just one home, was $255,000, which is a lot more than the average overall, right? Compared to the average net worth of the American who did not own a home, so therefore they were a renter, $6,300. I mean, that's incredible, guys. $255,000 for a homeowner net worth compared to $6,300 for a renter who did not own a home, guys. That is significant. That tells you right there that real estate over the long term wins and will help you grow your net worth and will help you just have more money in your pocket to be able to do the things that you want to do. So guys, as you can see, even though home values in Phoenix increased about 31 to 32% over the past year or so, which is incredible, it's still a good time to buy, in my humble opinion, okay? Does that shoe fit every single foot all the time? No, right? There are some unique circumstances, but overall, generally speaking, I hope I laid out the case for you that, in my opinion, is still a great time to buy and to own real estate, especially if you can be somewhat longer term on your ownership of that real estate. Guys, thank you so much for joining the video. Hope you got value out of it. Please, again, call us at any time about real estate investing, or if you're looking to just buy or sell, relocate to Phoenix, I would love and be honored to help you out. Me and my team, 480-660-5974 is where you can find us, or email us at info@kellycookhomes.com. And last but not least, Instagram, you can find us there. We're doing all kinds of stuff on a daily basis at Kelly Cook Real Estate Group. Thank you so much, guys. I really appreciate you. And again, ring that notification bell and smash the subscribe button. We would love to be on your YouTube page and to follow you around wherever you go, because we want to stalk you. No, I'm just kidding. We don't do it. Okay, guys, thank you very much. Call me. Call me.